February 11th, small account class, although many of you don't have a small account. If you're brand new, this is sort of a class for you. I know there's a lot of people that have been in for a while and they just can't get enough of my ranting. But it really is designed for new people to be able to ask those questions that you may not normally have asked in the live trading room that we do, 10:45. So some more basic concepts perhaps here. Any questions about the service, any terminology that you guys did not understand. So just so that you're clear on the schedule, let's do that real quick. So Tuesday, 10:45, live trading room. And that's not basic concepts. If you're brand new, you're gonna be like, what is he talking about? Good, you'll see that you've got a lot to learn. But it's for people that have been with us that want to see what's going on in the markets. And if there were live trades that I was taking, that would be where I would be taking them live. And this session is more of a beginner workshop where you get to ask questions that are more beginner. Then Wednesdays at 8 p.m. and Saturdays at 11 a.m. we do a 2-hour workshop, and I cover just about everything you can imagine, all subjects. I take all questions. Wednesday, 8 p.m. is my favorite session. And Saturday at 11 a.m. Right? Don't. So those workshops are 2 hours long, in addition to what we do today. And that's if in your master class. If you're in Legacy, we do a Wednesday morning Legacy room. And there's a Wealth Machine stock program that we're doing. We do a once a month webinar. That's something else. And there's Legacy Elite, which includes all of our memberships. So if any questions, I can answer any of that here. Let's just start off. Mr. Cash, good morning. Deb's a Genius, Untapped Market, Mona Newbie. Welcome, Mona. Kamikaze, what's up? Duke Rev. Mona, you did not read the instructions. It said go to this room. No, it did not. No, so it said go to the live trading room, and then at 12 o'clock, go to this room. But you're here now, I hope. Chef, good morning. Goozle. Mona, in Canada, saving up capital before you make your first trade. Great. Is it necessary for you to sign up for TradeStation now? Well, one of the things that you can do, Mona, if you do sign up for TradeStation, first of all, in Canada, you can't use TradeStation as your broker to trade. You can only use it for charting. So what we suggest people do is go ahead and get the $99 subscription so that you can look, your charts will look exactly like mine. All the videos are in TradeStation. All my indicators are coded on TradeStation. And with the $99, you get a simulated account. So you can, as you're learning, you can simulate all of the trades. So I think that's worth 99 bucks. And if you want to take that deal with TradeStation, if you're in Canada, just look above you in the alerts. You'll see where it says Canada TradeStation subscription, 99 bucks. And just make sure that you email Michael Langle at TradeStation and let him know that you are with Trade With Me Now. So you go ahead and you click on that link where it says trading subscription, $99 above you in the alert section. And then you'll see also above you an email address, mlangle@tradestation.com. And you just email him, hey, it's Mona, and I'm a Trade With Me Now member, and I'm getting the Canada subscription. But then it gives you the ability to build all of these charts, learn everything, get all the indicators that we have, and that we include, and learn all the training, and then simulate trade. Some greenage. Look at this. TMUS, AMD, Beyond Meat, Coop, Palantir, PayPal, Zoom, Baidu. So these are the stocks that are making the indexes pop up a bit. Cool. All right. Combsy, Groovelistic, EGM Dad, first time here, welcome. Dean Machine, Colton, Florida, Bird Dogville. Back to back, Bud, Jim Bob, Big Daddy, McCauber, Crushing Charts, what's up? Solar J, McCauber, Mad Dog Russell, what's up? Bud Bucks, Roddy in the house, Tree Hugger, Two Gun Smoking, Brian. Good to see all of you. Thanks, Grass, for the nice comment. Daryl, ding ding, round two. Option B's the Lake Rider Mustang here again. Kindness rules. Wicked Ticker, what's going on? Good to have you. Dookie, Turtle. All right. Questions. Electric Trader. I personally get a lot of direction from your rants and learn a lot. Yeah, I thought people did, is why I kept doing it. The idea is just to, listen and watch and see if you can get a little something. Yeah, Mustang, it says you want to go for the 79 monthly. Yeah, just look above you and you'll see the link for the $79. So if those of you that are new here, I'll just show it to you real quick. Takes a few seconds. When you first join, it's basically $94. It's two payments of $47, 30 days apart. So you have $47, and you can add things to that if you choose. But in the first $47, the first 30 days, you get to check out the alerts, my Monday morning video, all what's in the library, the masterclass checklist, go through the basic options, the trading insights, the recorded sessions, all the live sessions, everything that we do. You have 30 days to try it. If you really like it, at any point in the 30 days, some people do it on day 1, some do day 10, some 29. Within the first 30 days, if you decide to join us, it's $79 a month, which is $2.63 a day for all of this. And then after 30 days, it's $89 a month. That's our regular price. So most people within 30 days just go ahead and get that. If you choose to stay, yes, you got charged that. You will get charged the second 47 because that's the price to start. And then it's $79 a month. Okay, cool. That's it. If you wait past the 30 days, your alerts will stop right here at 30 days. The alerts will suspend. You'll still have library and live access. At 60 days, live access ends, but you continue to have the library forever. So if you paid the 94, you get library forever, but you don't have alerts and you don't have the live session. If you want that, it's $89 a month. But if you do it before 30 days, it's $79. So if you're within your 30 days and you do want to stay with us for $2.63 a day, right above you in the alerts section, you'll see the discounted $79 rate. Just click on it and it's $79, and then you're in, and that's it. What pen do I use? It's called Epic Pen. Right? Any questions on how that works? Really easy, right? $79 a month. If somebody, and I always say this, like I do the Monday morning video where I give you a complete overview, about 7 to 10 minutes of the entire markets as I see them setting up for the week. And then I give you my market commentary throughout the week in the alerts, right? Aside from the trades. If somebody told me that I could pay $2.63 a day for a trader to give me market analysis throughout the week and a video on Monday analyzing the markets just so that I could be a better trader, if I just got that 8, 9, 10 years ago when I first started trading, I'd pay that $79 a month just for that. But you get a full library of courses A to Z, from allocation, psychology of trading, how to read the charts, how to use Fibonacci, support and resistance, how to create verticals, butterflies, unbalanced flies, unique creative strategies to win in this market, how to have an edge, a 6-star setup, plus the indicators that we give away for free. And 7 hours of me ranting for the same $2.63. It's kind of a no-brainer. It's why our cancellation rate is ridiculously low. We have well over a 95% retention, which is pretty good. Questions? Let's go. You don't see the $79 rate up? Yeah, it's right above you. Just look above you in the alerts. You should see it. Okay, so the meetup. I'm going tomorrow to confirm, but it looks like we are going to be confirmed. I will let you know tomorrow night, but it's going to be in Fort Lauderdale. This is the meet and greet, just a real quick on it. I'll talk about this tomorrow night when there's more people in the room, but we are doing a meet and greet in Florida. It'll be June 5th. You can come in on a Friday if you want. And I have a room rate. that I've negotiated. It's going to most likely be at the Westin, not the Westin Fort Lauderdale. That's the crappy one. This is the Westin Fort Lauderdale Beach. It's on the ocean. It's freaking gorgeous. June 5th is a Saturday. So we're doing a meet and greet Saturday night, followed by a Sunday live session, some training and breakfast and all kinds of shit Saturday morning. So if you wanted to, you could come in on Friday, stay Friday, Saturday, enjoy the beach all day Saturday. You can enjoy the beach Sunday before you go home. You can do a whole weekend thing. If you're local, you can just drive in for the Saturday night and stay over one night for the Sunday, or you can come back. But it's basically June 5th and June 6th. It's Saturday, Sunday. If you're flying in, fly into Fort Lauderdale. Just make sure your ass is there for Saturday night. And I'll give you the details tomorrow. I'm going there tomorrow to make a deposit and lock it in. So that's where it's going to be. Fort Lauderdale, June 5th, Westin on the beach, not the Westin on Commercial. So I'll give you the details tomorrow night because I'll have it locked and loaded, okay? Hope to see all of you there, and then we'll take a kind of a poll. I want you to, text, and you'll let me know who's coming so I can give them a count. But it should be really cool. We'll finally get a chance to meet some of the members face to face. We'll drink, we'll eat, we'll have fun, we'll laugh, we'll train, we'll do like just a little unstructured get together. The big bash is in October, but this is going to be more of a meet and greet for people that either live in South Florida or are close enough or just can't wait to meet everybody. Okay. Tony, how'd you generate the Ichimoku cloud? Yeah, I just added it onto the charts, standard. I didn't make any adjustments to it at all. I just added the cloud. There was really no adjustments necessary. All you have to do on this, if you want the cloud to extend, is you go to, you right click, edit, and somewhere in here, no, scaling? No, it's not there. I think you have to do it in the window. Where did I do that? Settings, window, here. And then spaces to the right, you put like 26. That's the only thing I did. You just add spaces to the right so the cloud can continue. It's just an interesting, I've just been playing with it, and you can see how it broke through the 60-minute cloud. And so markets are going to be under pressure until we can get above the 60-minute cloud. So once you get above this 60-minute cloud here, then the markets are really free to rally. So it's just an interesting study that I have on there. I don't do a whole lot with it other than watch it right now. Michael, I'm not saying that I want to take this trade, but if I were, how would I take a trade on LRCX with a small account, say 1,500, and didn't want to go over a 5% allocation? Okay, that's a good question. So he wants to take a trade on this. He's got a small account, and not saying that he wants to take the trade, but if he did take the trade, what would he do? Well, first off that I see, you've got no compression. The only compression that you've got on the daily is that it fired short. So here you fired short twice. Ding, 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 right? So that's one thing that I don't like. You're in a downward move here, all the way down. You've just hit the 100 period moving average, and your moving averages have now crossed to the downside. So the 8 is now over the 21 instead of this. An 821 is like this, and when it's reversed, it looks like this. So I would not take this trade. I don't like this chart pattern at all. I don't like the way it fell here below the 8. This had a really tough day yesterday, got below the 50, and now you're sitting here at the 200. So until this thing can right the ship, you've got no compression on any of the intradays, and you're on the way down here. So I don't like it. But if you were gonna take a trade, right? So if I was gonna take it, I would take a reversion to the mean, which means all I'd want to see it do is get back up to the 21. So the 21 is at 617, right? That's the mean. So what would I do if I had a small account? I would go to LRC. LRCX. And let's just see. I don't think you have enough time for this Friday, which is the 14th, to really. This says the expected move is $21. And you're at 586. So 586 plus about 22. $22 puts you at. Well, now that's interesting. So the expected move puts you at around 600. Let's go back to the chart for a moment. A little over 600. And I said if you wanted to, you could play a reversion to the mean. So if you don't revert to the mean, because the only way that you're going to really go like this and get back up to the mean is if you get volume coming in or a compression that releases long, but you don't have that. So what do you have? Well, what if this makes a move just to the expected move? It just kind of makes the move to here. What do you run into? If you think it's going to make a little move, what do you think it's going to move into? You don't have 3-2-1 compression. It's not going to go through the roof. If this thing grinds between now and the next 3 days, what do you believe it might run into? Anybody? Russell says big, fat, round number. BRFN, correct. So 600 is right there. So if I were going to take this trade, I would go back to the options chain and say, I'm not going to spend my money buying long calls, certainly not with an account size like that. But $22 puts me darn close to 600. So what if we just did a 600 butterfly and see how cheap we could get it? 600. So you want it as wide as possible. It ain't going to be cheap because it just ain't. For $1. So that's what I would do. I would risk $1 to make $4, right? And what if you don't? What if you just double your money on a small account? If you make $100, that ain't so bad, right? If you're willing to spend a little, I mean, if you could spend, what'd you say, 1,500, and you don't want to spend more than 5%. I think that was what you said. Well, that's $75. So close enough, right? Look at this, 90 cents. You could get this thing for 90 cents and get better than 4-to-1 odds. And if you got above 595, you're profitable, right? So 595 is the lower strike. So you take 595 and you add 90 cents to it. That's the cost of the trade. So 595.90 at expiration this Friday. That's break even. Anything above that is profitable till you get to 600. And then diminishing down, back to your break even, which would be at 605 minus 90 cents. So 604 and 10 cents is your break even on the upside. So anything in between these two numbers is profitable and it costs you $1. So that's how I would play it. Okay. Still struggling with long, short strike terminology versus higher strike, lower strike. I don't know what higher strike or lower strike is. Like here, look at the butterfly for a second, Big Daddy. So here, your short strike is this, -2. So you're short the 2 in the middle, and you're long here and long here. This is one long call up here, one long call down here, and you're short 2 in the middle. If you were to do a vertical, the short strike is your target. So if you do a call debit spread, let's do something that's more realistic. Just call it 585, 600, just as an example, right? So here's an example. It's a big stock, but anyway, here's your long strike. You're long the 585s, and you're short the 600. What's your target? 600, the short strike. Because if you can nail 600 or above, right? You'll be able to make the width of the spread because you're going to make money on 585 and proportionately you lose money on the 600. So that's how it's always going to be the width of the spread. I'm sorry, the width of the spread is 15. So you'll always make $1,500. Any price above $600, you'll make 600 because for every dollar you're making on the 585 call that's your long, you're losing $1 on the 600, but it's 15 wide, so you make the 1,500. So in other words, you've made the $1,500, and at 600, this expires worthless. But as soon as you go over 600, you start losing. So let me just show you what that looks like, a little better chart. In this example, the 585 call, you're long. So as soon as you get up to 600 in price, this call is worth $1,500. The $600 call that you are short, right over here, remember, is worthless at 600, right? If you bought a call at 600 and price was 600, it'd be worth nothing. So you bought the 585 and shorted the minus 600. You shorted the 600 call. At price of 600, this becomes worthless. And this is worth $1,500. That's your profit at expiration, right? If price was here. But as soon as price goes above 600, that's okay. This will cause you to lose $1 for every dollar it goes above 600. Every penny it goes above 600, that's what you'll lose. But you'll gain another dollar over here. So if you already made $1,500 when you got to 600, when you go to 601, you're going to lose $1 on that short call, but you're going to gain $1 on this one. It's a wash. If it goes up to 608, you're going to lose $8 on the minus 600 call, but you're going to make $8 on this one. It's a wash. It's a wash, it's a wash, it's a wash over 600. So what is your profit? It's the same 1,500, the width of the spread, regardless of how high it goes above 600. So on a vertical, it's the width of the spread is your profit, minus whatever you paid to get it in the first place. So if this cost you $650, your profit is going to be $850. Regardless, as long as the price stays above your short strike, because as soon as price hits that short strike, it's worthless, and all your profit is right there. Understand? So I'll do another quick example. If you did a 60-65 call debit spread, you're long the 60 call, you're short the 65. Here it is, looking like this. If price hits 65, this $65 call is worthless. This $60 call is worth $5. You just made $5. If price goes to 66, that $65 call is now minus $1, but that's okay because the plus 60, this $60 call is worth $1. It's a wash. You still make the same $5 spread. If price goes to 70, you're going to lose $10 on that short call, but you make $10 more on the long call. It's a wash. You still make the same $5. Understand? So if this trade cost you $2 to get in, and here's the spread, $5, your total profit potential is $3. You can't make more than that. You can't lose more than the debit paid, and you can't make more than the spread less the debit paid. That's how verticals work. And it's a lot better than just buying the straight up $60 call, because that $60 call could cost you $4.50. And you need to get the $64.50 to break even. But if you did the 60-65, or let's just say you did the 60-64, and it only cost you $2, look at that. Would you rather spend $4.50 on a long call that's got to get up to $64.50 to even break even, or just spend $2 And if it gets to 64, which is less than 64.50, guess what you made? You made $200. The long call didn't make anything yet, but your vertical made $200. You'll see the comparison? See it? $60 call costs $450. That means $64.50 is the target at expiration for you to just break even. But if you did a vertical and went 60-64, use 64 as your short strike, as your target, all you got to do is get to 64. Because if you get to 64, the 64 call is worthless. This one just made $4, cost you $2 to get in. You just made $200 while this guy sitting on calls lost 50 cents. He lost 50 cents. You made $2 being more conservative. Got it? That's a powerful lesson. Comprende. Would you have someone in technical support available that can walk you through setting up your charts on Thinkorswim? Sorry, I do not. I don't use Thinkorswim, so I don't know anybody. I don't know anybody at Thinkorswim, so can't help you with that. Sean says, I'm in Canada using IB, having trouble figuring out how to enter a vertical. Sean, go to the community blog that we have in the library. It's on the last page of your library, and you'll see an interactive brokers section. Jason was good enough to do a couple of videos there on how to put on verticals and how to trade, how to set up your charts, stuff like that. So look at the resources that we have. Go to the blog. It's a Trade With Me Now community blog. It's in your library, and you'll see exactly how to do it on IB. He created a video for you there. How can we set up radar indicator and other indicators in TOS? Turtle, the indicators that I code are in TradeStation. So I suggest you add a second account. My suggestion is that you all have a second trading account. The great thing about the deal that we have with TradeStation is it won't cost you any fees, monthly or otherwise, to get a TradeStation account. So all you need to do is pop $500 in there. Just fund it with 500, let it sit there, put it in crypto cash to make 6% interest, and then you've got all the charts and all the indicators. And you have a backup trading platform in case TOS goes down, which I've heard it sort of does. A little confused on call credit spread, put credit spread. Which one to sell? Always larger price than sold. Yeah, so Texas Trooper, call credit spread is when you want price to go down. You pick up a credit, shorting the call. And then a put credit spread is when you want price to go up and you short the put. So if you were wanted, let's say you did a 70-75 put credit spread, you would be, I'm sorry, strike that. If you did a 75-70 put credit spread, you'd be shorting the 75 put and you'd be buying the 70. So as price moves up into that 75, the puts become worthless, right? So if price was at 76, how much would a $75 put be worth if price was at 76? Zero, right? How much is a $70 put worth when price goes up? Worthless. So you want price to go up past the short strike on a put credit spread. Let's say you got $2.50 credit putting on the put credit spread. If price stays above 75, you keep the credit. You know why you keep it? Because the whole damn thing expires worthless. There's nothing to do. You just keep the credit that you got. The call debit spread is the exact opposite. It would be a 70-75, and you're shorting the $70 call, and you're buying the $70 call, $75 call, hoping that price goes below 70. So if price goes below 70, let's say it goes to 68, what are $70 and $75 calls worth if price is at 68? Well, they're worthless because they're out of the money. Worthless. So if you took in a 250 credit on a call credit spread and price went down to 68, you'd get to keep the credit because this is worthless. So call credit spread is when you want price to go below. Put credit spread is when it's counterintuitive, right? Because as soon as you say the word call, you think up. soon as you say the word put, you think down. But when you're talking about a credit spread, it means that you're selling the put. That means you want it to go up. You're selling a call. That means you want it to go down. You buy a put here for protection. You buy a call here for protection, and that's what creates the vertical. Great question. Would love to hear about the fib and using them best. Always confuses me. Angad, have you watched the support and resistance video yet? Because rather than go through it all here, I go in excruciating detail in the support and resistance video. So have you seen that? Have you watched that video yet? It's in the basic options course. How do you make sure you get the $79 and renew masterclass? It's $89. Yeah, Lake Rider, just look right above you and you'll see $79 discounted monthly rate. Just click on that link. And that's where you get the $79. Okay? What would the minimum account balance record for minimum account balance recommended for legacy? Here's the thing about legacy, okay? It's not so much about the size of the account, it's your knowledge base. So somebody that only has, say, $6,000 can certainly trade legacy. Because if I do a trade that's an $800 trade in legacy, your knowledge base can take what is your 5% allo, which is 300. You can take this trade and tailor it to your needs so that it's only 270. So if I do a Caterpillar trade that's 10 wide, here, let's do it real fast here. This is an example. So let's say I go to Caterpillar and I'm saying, okay, legacy, let's take a nice bite out of Caterpillar. We'll do a monthly. Current price is 238. Let's go to a 235. Let's do a 235, 245. See what that is. Yeah, so I like this trade a whole lot, right? In fact, I do like this trade a whole lot. So the expected move is almost 10 bucks. 10 bucks expected move plus the 238 that we're at right now, 238 plus a 944 expected move, is going to put you right around 248-ish. That's where the markets say it could go up to. It could also go down $10 to 227. But if you like the movement of Caterpillar, you believe Caterpillar is going to go up, then 248 is the expected move. Well, you know what? I don't believe the market makers. And what if it just doesn't quite get where the markets say it's going to go? So I'll go just below the expected move to 245. My long call will be in the money, 238, 235. My short call will be out of the money, which is my target, $3 shy of the expected move. For 454 bucks, I like this trade. I love the risk reward. I can make 546 and only risk 450. I like that. And I might even say in legacy, you know what? Let's see if we can get this sucker for 440. Okay, and that's the trade. 560, 440, love this, right? But you might say, well, hey, I've got only a $6,000 account. So taking a 440 trade on a $6,000 account is like over 7% allocation. That's a bit high for me. Well, then all you do is adjust the strikes. So you could just bring this up to leave the target where it is, if you like. You can bring it up to 237.5. And now it's a $3 trade. Bring the strike down a bit. And now it's 226. So look, you just created a scenario where you have a $6,000 account, and I would say, let's see if you can get this for 220. Nice risk reward, right? Risk 220 to make 280. This is a legacy trade, but instead of spending $440, you can do it for half the price because you altered the trade. Not only that, on the legacy trade, we've got to get to 245 for max profit. Since you lowered the strikes here, you only need to get to 242 half. So not only did you make the trade cheaper, still stick with a great risk reward, you don't have to get as high as me. You only have to go to 242 half. See it? So as far as legacy is concerned, it's not about the size of your account. It's there a little bit more risk in some of them. I don't necessarily follow the 6-star setup in legacy because sometimes it's a momentum move, sometimes it's an earnings play that's through earnings report instead of a run up to earnings. There's different trades that we do, and it's really, the room is designed for people that know the terminology, have gone through the course. It's, you know, it's when you're ready, mentally, emotionally, and you understand the terminology, you understand what butterflies are, how they work. That's when you should be ready for legacy, not necessarily the size of your wallet. Love your rants. If it's worth a rant, there's something to learn from it. Thanks. The passion in the rants are wrapping ideas in gold. Thanks to the other Michael. Amen to that. Awesome. Thank you. Thank you. Is Legacy Elite still available? Yeah, it is. Yeah. So Legacy Elite, Lake Rider. I hope you found the link above you, right? Just in the alerts directly above you, the chat window is that $79 link. Yeah, Michael, maybe I'll talk about the cloud on tomorrow night. Would be better. Cold in Florida. I signed up for Legacy just for extra rants. Yeah, so Legacy Elite basically just is all of the things that we offer at the max discount. So a lot of people said, well, you know, I didn't know who you were, so I didn't know that I should get Legacy or even Masterclass with a year's worth of alerts and get 50% off, and now I can't get that 50% off. So Legacy Elite is all three. It's Masterclass, Legacy, and the Wealth Machine at the cheapest possible prices you could ever get. So if you just look at the Masterclass annual is $890. You save 2 months. Legacy annual is $1897. That's the annual rate. And the Wealth Machine is $1497. So if you added $1897 plus $890 plus $1497, you add it all up, it's $4284. Or that's what you would pay annually if you took the max, you know, discounts that we have regularly. That's what this is, right? And then if you were smart enough to take our alerts at 50% off when you first joined, you would have only paid $534 for the Masterclass, $99 a month for Legacy, which is $1,200. And if you took advantage of our pre-launch price of the Wealth Machine, you only paid $1,297. So when you add this up, it comes to $3,021. So these are the best prices you could ever get for Masterclass. 50% off on Masterclass, Legacy, and the $200 pre-launch price, $200 off on the Wealth Machine. Comes to $3,021 a year. Well, Legacy Elite is $3,000. It's less than all that. It's $250 a month, but you have to buy it annually. Some people are paying $79 a month for Masterclass and $197 for Legacy. That's like $287 a month. Legacy Elite's cheaper than that. And Legacy Elite basically is everything that we have at the cheapest possible price, even less than that. And every other program that we come out with, you get for free. You're locked in as a lifetime Legacy Elite member so that when we add crypto, day trading, other trading rooms, other indicators that we're going to be charging money for, you get them all first and you get them all free. And you get 50% off on the convention tickets and special events and special meetings and stuff like that. So that's what Legacy Elite is. It's $3K and it includes everything. And last thing I'll mention about it, if you already got the $534 rate for Masterclass, or you paid for Legacy up front, or you have anything that you did biannual or annually, right? You did any biannual or annually rate for Masterclass or Legacy, whatever's unused, we will subtract from the $3,000 when you get into Legacy Elite. And then it's $3,000 a year after that. So if you already paid your $534, but you're only 2 months in, you get 10 months of credit taken off of the $3,000. So it's $4,450 times 10. So you'd get $445 off of that because you have 10 months unused. If that makes sense. So if anyone's interested in Legacy Elite, the only way to get Legacy Elite is to text me on the alert line. Don't have to write a paragraph on how much you love me. Just write, I want Legacy Elite. And then I'll forward it to Aaron. He'll work out the discounts. He'll charge your card. Whatever the discounts are, he'll take that off of the 3,000. And then you'll get the Wealth Machine and Legacy and Masterclass. Okay, that takes care of that conversation. No charge for the meetup. No, it's just an unofficial meet and greet. The only charge you'd have is if you wanted to stay the night, and I'm going to have a room rate. But I'm taking care of drinks and food on Saturday night, breakfast on Sunday, and just come if you can. If you make it, it'd be great. What do you think about energy stocks? No, I'm definitely not interested in any energy stocks right now. If you bought last week, I would not load up. I mean, with what's going on with the pipeline right now, everything is very shaky. So I would just hold a little and see where it goes, but I definitely would not be in energy right now based on what's going on in the news, as it could, have an issue. High B trending, I like that handle. Can you do a Fibonacci example? I watched the video in Starting Points, but it covered the EMA, Bollinger, Keltner. I've seen examples in past videos, can't remember which ones. Yeah, so IB trending, like I said before, if you go to the support and resistance video in the basic options course, that's where I show it. But I'll give you one fib right now. So one way that it's cool to do fib, I'll use Walmart as an example. So if you wanted to trade Walmart and you see this decline, the decline before the rally, and you want, let's say, this comes back and you say, you know what, I want to get into this trade. I like it at support here. I'm going to buy it somewhere in here. My question is, where is the target? Where can this go to? So what you want to look for are the extensions. So here's one way to do it. So you go to drawing, you go to Fibonacci, you swing high to swing low. That's one fib level to do, right? And so what you'll see is this measures this move to this move, and then it projects two things, retracement and extension. Retracement means as price moves down and finds support, as it starts to move back up, Fibonacci theory says it will retrace most of the time 50% of that move minimum, and could potentially pause there, test that level and go back down, or if it's going to continue going up after this pullback, it needs to break that 50% level. Once it breaks 50%, it needs to break the next level, which is called the 618. So down, here's the first level, not too much resistance here, that's called the 382. Here's the 50% right here in gray. You can see it punches through, goes to the next level and stops right there. That's called the 618. 61.8% of this move. This is 100. This is 0. This is 50. 618. And you can see how price is just hanging on at the 618. And right now it's right below it. This is a tough level. Once you break 50%, the next zone is the 618. That's your buy zone between the 50 and the 618. Some people wait until you break and close above the 618, and some people get in early as soon as you break the 50. So these are retracements. 38.2% of the move, 50% of the move, 618 of the move, 786. Once you can break through the 618, the 786 is a little easier to get through, and then you're at what's known as the previous high, right? The previous high is the 100% level. And once you can get through all of this, 3-2-1 compression should send you greater than expected move to break out from the previous high, and then you're free to go to extensions. So what happens is the first extension is 1272. That's 127.2% of this move. And moves to the upside tend to terminate at extensions. However, if you could break this, there's a 70% chance you'll get to this extension, which is the 1618 target. And that's how fib works. Pretty cool. So that's one way that you can measure fib, is to take a prior swing. You could take this swing high to this swing low and project out your target over here. So that would be, this is a major swing high, and I'm gonna leave this on here, okay? And now I'm gonna do the previous swing high. Leave it on and see if you have confluence between all the lines. Swing high to swing low. Now you see the blur and the overlap? The blur and the overlap is good. That means there is some agreement in levels. So look at this. Now that I've done that, so I've got a swing high to swing low that was way up in here, right? You remember what I just did. Then I just took this recent, this is called the major swing high, major, previous swing high, and this is the recent swing high, right? Because it went up and then pulled back. That's a recent swing high. So I just went swing high, swing low. There's the 50% retracement, right? But look at the confluence here. Look how the 786, how the 786 here and the 100% level are almost together, right? Very interesting. That's going to be an interesting resistance level to break. But now you have levels here, levels that it need to like climb up and hold this, climb up here and hold that, reach up to here, come on, get above that, right? So this is interesting to just watch by putting multiple levels on there, all right? A couple more minutes and then you gotta go. See what other questions you have. Ash, hi Michael, I am on my 30-day spot. I have a very small account because I'm 73 years old, fixed income, need your service to supplement my income, but so far I have not had any recommendations from you, or had any recommendation. All right, so I don't know what you mean by you haven't had any recommendation.